All right. Good afternoon, everybody, or good morning, depending upon where you are. But I do want to get the webinar going. I want to cover a few things today and uh, a couple of new things, I think, towards the end of the webinar, which you might find interesting. But anyway, let me get going. I'm going to jump right in. Welcome again to the webinar. Today, of course, is Thursday, June 14th, 2018. So we are about halfway through the month of June already. All right, we're going to start out with the monthly charts. Now, again, here's the S&P, and again, this chart I find just particularly powerful. You know, we had the breakout last year above the upper band, and you know, we screened up well above it in January, and we pulled back and really retested the upper band twice. You might say three times. And again, the market failed to close beneath the upper band. So we have to respect this and we have to stay long the market. And honestly, I don't believe that the market starts to sell off in any meaningful way until we get a close back inside the upper band. Okay. All right. Here's the composite. You see virtually the same situation. Okay, screened up well above the upper band. And in the case of the composite, the market never really even tested it on the pullback, stayed well above it. And then here's the Dow. Same scenario. We broke out above it last year, and we continue to trade well above the upper band. All right, here is oil. This, again, monthly chart. You know, as we've been kind of talking about, for a while, you know, the oil had rallied back to the mid band here. Mid band is 56.89. Back in here, I remember saying, you know, I do expect most likely another retest, if not a violation of the mid band. For the really the principal reason being that the CMF had flipped to positive. And that's what happened. Okay, so now that we are above the mid-band, we would expect that level to offer support. Okay, and here's Apple. Apple's virtually the same scenario as the composite, the overall market. Broke out strongly back last February and, you know, closed out the other day at about 192. Still well above it. And again, the thing I was pointing out is this. If you bought the breakout above the upper band, that was about $130. You know, you look now, here's Apple, you know, $60 higher. So it's moved up like 50% since the violation of the upper band. And then here's gold. Gold, to me, is in a long-term trend, sideways consolidation. It's getting tighter, as you can see. The question now is, do we break down or break out? I favor and am predisposed to a breakdown. And then here's a weekly view of the TLT. Okay, the 118.75 is a major oversold level. So this is going to be very interesting to see if the TLT breaks. All right, now we move into some shorter term. Any questions before I move on? Okay, now we move into some shorter term setups. Here's the S&P 500 60-minute chart. Okay, our active objective is up to this 2812 level. And the confirming line down here, the 2753, I would expect to offer support on a pullback. All right, I don't know if we quite get there today, but that's a level I'm looking at as a support level. All right. Now we look here at the 30 and look what's happened here. We had the bullish crossover last week, okay? So now we have the 30 and 60 and uptrends. You know, quite frankly, the only thing you really want to do is stay long here. You know, wait for the market to bottom and then put on your long positions. And by the way, you know, we can get help to confirm when to go long by looking, of course, at the VIX. That should be a key indicator for us to help us determine the entry point on the market. Okay, let's see here. Having said that, okay, we'll take a look at the market live when I close down after I close down the PowerPoint. But you know, with this type of trend formation, you really want to be long. Okay, now here's the VIX 60-minute chart. You can see the VIX is in a downtrend. Okay, we sold off against the 1875 level, came right back down to 1250, and as we know, it's traded around 1250 for probably about a week. All right, which again, the 1250 level cautions us that a bounce in the VIX or a drop in the market could be happening. All right, and in the case of the VIX here, we've had the bounce. Now, the million-dollar question is, can it close above 1406? All right, because that to me is the key short-term level at the moment. And the significance of 1406 is that if we do have two closes above it, I would expect a retest of 1875. So again, right now, 1406, until there's a violation of it, is still resistance. Okay. All right, now we scale down to the 30-minute chart, and we see with the 30 has just crossed into a downtrend. So again, we have both shorter-term time frames and downtrends of the VIX. So the million-dollar question is, what level does resistance come in here? And then here's the diamonds. I started showing the diamonds instead of the Dow because, well, first of all, this is the tradable instrument if you're going to trade the diamonds or the Dow. But again, you can look at this chart. We see a beautiful uptrend in place, right? Oversold condition right in here, 242. And since then, the diamonds are up 11 points. I mean, just a really nice run. We took out the 250 level, fell just short of the major upside level at 257.81, and now we're starting to pull back. So, watch the support level here on the diamonds if you're so inclined to trade the diamonds and, look to get long. And again, we look here at the 30, the 30's just crossed up. So again, we've got both short-term charts in bullish trend formations, which indicates to me that the market should head higher, or at least a retest of the high. GDX, not very exciting, 2266 resistance line. Here's the 30. 30 has crossed up, all right? So we might get a little push up here higher. Maybe we retest 2344. And then here's Apple. Again, Apple, you don't even see the mid-band here on this chart, okay? And the 200 is 187.03. The mid-band's 183.71. So you look at this, I mean, it's a good 4 points above. The 200 EMA is a good 4 points above the mid-band. So again, like the other major markets, wait for support to come in, then look to buy. Again, cross to the upside on the 30. So we've got both short-term time horizons and uptrends. And then here's the XLE. XLE has been, to me, it's been kind of stalling out. It hasn't really made a big push higher, nor has it really made a big drop lower. 75 to me should be a major support line at the moment. So even on a pullback, I really don't expect it to drop under 75. If it does, maybe it goes to 74.22. But here's the problem right now. Short-term chart, the 30-minute short-term chart has crossed. It has been bearish. So I really don't believe we start seeing any sort of significant bull move here in the XLE specifically until we see the 30 cross back up. All right, now I'm going to move on to another topic, and that's earnings. Okay. And again, I'm going to continue to show these type of price actions because to me, it's just a wonderful price scenario. And here's the situation very simply. Goose, it's Canada Goose Holdings, reported back on the 31st. They gapped up. You can see the move continued up, continued to follow through to the upside, and then it pulled back pulled back, got oversold right at 42 and a quarter, and since then it's up another $3. So I guess there are two questions here, two issues at play. Number one, how do we trade this move? And of course, we know how to trade this move, so I'm not going to even discuss that. But to trade this move, the continuation, you really want to see a price bar close above the high of this gap bar. And it looks like to me the first bar that did it was here. So you could have bought right after that close, right, with a stop just under the low of that bar. And I guess if we look at that, that's roughly the 41.5 level. So it trailed up another almost 4 points based upon that setup. So again, a very, dynamic setup. So we have really two trades off of the post earnings. All right, here's CRM. CRM gapped down. And again, this is gapped up. We had the second bar close under the low, and there was never any follow through to the downside. All right, so, we subsequently did close above the high of the gap bar back in here. It continued to trail up a bit. But to me, on CRM, this was the big move. On this scenario with the gap up and then a close under the low, I'm not so inclined to buy the long side for the continuation. The better pattern is the pattern we've seen on Goose, where, the stock is continues to accelerate to the upside right after earnings. And to me, that's a much better pattern. Okay. But nonetheless, we had an opportunity to get long here. It's about a $7 swing. Here's Ralph Lauren, gap up off earnings. He was the first pullback. You could say here, too. About a $6 swing. Actually, more if you carried it up to here. It's about a $12, $13 swing if you got out at the gap. Gaps, by the way, are typically a very good place to cover along. And then we had another pullback here on the 7th, about a $7 swing. So again, these are fairly repeatable patterns, and that's what I really like about this. All right, I want to just show this. This is a short-term bottom, okay? I pulled this off, I think, a few days back. But I wanted to show it because I thought this was very interesting. I mean, you can distinctly see the 60-minute chart in an uptrend, okay? Price had pulled back to about the mid-band on the 60. You can see we got oversold here as defined by the Williams. Actually, you could say we were oversold here and here, but it continued to retest and drop to the mid-band. Now, again, very simply, we know it's in an uptrend because the 200 here is above the 253, and both are gently sloping up. And that, to me, is a definition of a uptrend. Now we go to the 30. Okay, we see the 30 in an uptrend as well. Oversold on the 30th, on the 29th, underneath the mid-band, okay? And then we scale down. Now, here's where it gets interesting. Here's the 29th, uptrend on the 30 and 60. You look at the 10-minute, and the 10-minute, it was under the lower band. So this becomes your opportunity to get long. And sure enough, the market reversed and continued to climb, took out the mid-band, and actually almost hit the upper band. But down here, I have written new high. Now, this is a pattern I want to show, because if you compare these peaks of the ADX, we made a new high in price. We made a higher high in the ADX line. That tells me there's a very, very strong likelihood that the price is going to continue higher. And that's exactly what it did. So anyway, this is the pattern. I mean, we've got 30 and 60 in an uptrend, price below the lower band on the 10, and we want to be a buyer. Okay, that's what I wanted to cover on the PowerPoint. I'm going to go and look at some shorter term charts now. Just give me 1 second here. Okay, let's take a look at the market, SPX. Okay, so we had the gap up this morning. We pulled back, and now we're kind of climbing or trying to climb back up. But again, if we look at the 60 and the 30, right, both are still in uptrends. So again, you still want to be trading to the long side when you see this formation. And trading short is probably not a very good idea. I wanted to see if the XLE is starting to gain some traction here. Perhaps it is. And the other one is Apple. Okay, so Apple's kind of going nowhere today. But I would look for support on Apple and then look to be a buyer. It's a funky bar here, by the way. I don't know if that's really a true bar, but it's a $20 bar. Okay, that's what I wanted to cover today, guys. Really not a lot to talk about. We're kind of in a lull with the slow, we're kind of down to the end of the earnings season. We did have the Fed announcement yesterday. I don't think the announcement really shocked anybody. Let's take a look at the TLT today. Fed kind of did what they said they'd do. And now here's very interesting because now the TLT is jumping, which means the rates are going down, even though they announced a rate hike. So, you tell me. Interesting. Anyway, that's what I wanted to cover today, guys. I want to thank you all for being here, and we'll reconvene again in 2 weeks. Thank you.